Welcome back to lesson number 3, day trading for beginners. And today we're going to cover the conflicts of interest that exist in the financial marketplace. You need to fully understand the relationships amongst all the players so you can try to come up with the best edge in your day trading so you can make a profit by buying low and selling high. In the prior 2 lessons, we covered the players in the marketplace as to buyers and sellers, and the experience and educational background of professional traders. We also cover what is the marketplace. This is information that is necessary for you to know so you can fully understand where you stand in the big picture when you go into day trading. Lacking this foundational knowledge will impede your ability to fully understand how to day trade to benefit yourself. The stock market is full of conflicts of interest amongst the players. And that is the reason why across the world, governments impose regulations and laws that govern these financial marketplaces. We previously mentioned the role of corporations in the financial marketplace, and they're subject to certain governmental regulations. The financial marketplace, the exchanges, is full of conflicts of interest. So you have the corporations that they have their own internal goals. You also have the broker dealers. These are the middle people who execute the trades on behalf of the investors in the financial marketplace. But they also have a conflict of interest. They might want to push certain stocks that will benefit them because they get greater commission. Next, you have investment advisors involved who provide advice or manage investment accounts on behalf of the clients. They also have a conflict. They may recommend a product simply because they may get higher fees. And it will prioritize their benefits or profits over a client's interest. You also have, next, the institutional investors, the hedge funds, pension funds, mutual funds. These are large pool of capital investing on behalf of clients and beneficiaries. They also have conflicts of interest. A fund manager may take excessive risk to boost short-term returns to attract more clients. They're also subject to regulations. Now you have the retail investors, just people, individuals, selling and buying securities from a broker that executes those trades in the stock exchanges, the financial marketplace. Now, what sets these individuals apart is mainly lack of knowledge. They're very vulnerable to manipulation. You heard it before, pump and dump schemes. They rely heavily on information and advice from brokers and advisors, which can be biased because the brokers and advisors, they have their own self-interest involved. There are regulations that seek to protect this type of investors, the retail investors. Next, you have the exchanges themselves, the financial marketplaces. At least here in the United States, you have the New York Stock Exchange, you have the NASDAQ, and there are others as well. They also have their own conflict in interest. You see, exchanges make money and fees that may provide an incentive to the exchange to overlook the weaker companies. And they also have high frequency trading firms, which may create uneven playing field for retail investors. These exchanges are regulated by self-regulatory organizations like the SEC. And the main goal is enforcing fair trading practices to prevent insider trading and maintain transparency. You also have the analysts. They provide independent research or credit ratings, and they're employed by investment banks that may issue positive research on companies that are banking clients of the banks. They're also subject to regulations, although they're not fiduciaries. And these regulations require them to disclose conflicts of interest and maintain some independence. Now, in summary, you can see how all these financial marketplace players may affect your actual day trading goals. Ultimately, you want to buy a share at a lower price and be able to sell it for a profit so you can make money and achieve massive wealth through delayed gratification. But if all the cards are stacked against you, how do you get an edge? When you understand the players involved, how knowledgeable they are, you have all these conflicts of relationships, and the retail traders are known for lacking the same expertise. Thank you. If you have not subscribed, please do so. And if you like the content in this video, smash that like.